Hello traders, welcome back to another video here at Sniper Effects. I hope you guys are having a wonderful weekend and you guys have had a really fantastic trading week. So today I messaged and left a little poll on our main public Telegram and I asked you guys, what did you guys want me to break down? Was it dollar yen? Or was it Bitcoin? Because if you guys have been following the channel, I've been sending a lot of public trades and they've been doing very well so far. So a lot of you voted for dollar yen. So that's what we're going to go in today. So originally, the trade idea was sent on the 5th of October. You can see that if I scroll up 5th of October. And you guys know from the analysis that I've done on the previous videos, this was a pair of interest of mine this week. And it presented a beautiful setup. So I sent it to you guys over here and we'll see the result. I think you guys have already seen it, but dollar yen absolutely flew. So that trade was sent over here, right here. And it was about, if I measure it from the entry, it was executed. It was about a 2.2, 2.1 pip stop loss, and you could have added a bit for spread. However, the risk reward to the highs was almost a 1 to 55. We were initially in from this entry point anyway. So across those two, I mean, that was a 1 to 35, but across those two entries over there, you were pretty much almost at a 1 to 90 over 3 days of trading. And of course, you had a little retracement here, which you have to withstand, but that is what you do when you try and hold a swing to your probable target. So obviously a fantastic day, 3 days trade to get to this TP over here. And of course, it's flown on further. And I'll break down why it was a good sensible take profit over here. However, you can see the devastation that was caused over here. And obviously this was going on to the chart work I had done last weekend looking at dollar yen. So of course, before we dive into the entry, etc., let's go on a higher time frame and build our narrative of what's been going on. So obviously the market over here, you can clearly see broke down this very important key structure point here. So we shifted into a heavy bearish market dynamic over here. That shifted on the monthly over here. And so we just printed a new monthly higher high. Of course, the lower time frames here were trending and building that internal trend to create that monthly external structure point. And I gave a very detailed breakdown of this on the Sniper page. So the market then broke this internal daily pressure or these daily landmarks and continued to trend down internally into a downtrend. However, we got a reshifting of this back into a bullish market. Now, structure here became mixed because on the monthly, this is a higher low, but it's unconfirmed. What that means is there's a possibility for the market to head lower and extend that from this external landmark to all the way down here into deep discount levels. So they would be more interested in buying in those levels. However, that could also have been the key structure point that shifts that high. Obviously, everything's unconfirmed. So when price pushed up here, it shifted these internal landmarks over here, as you can see. However, it wasn't able to shift that high just yet. We actually printed, because we wiped out those weekly structure points, a weekly higher high. However, this could have also been a lower high on that monthly higher time frame. So the monthly at the moment was bullish, right, from this external landmark over here. However, the weekly was bullish also, right? However, that weekly pressure that was building up here broke down over here, and then we shifted into a weekly bearish market cycle over here. So there's two possibilities here. Are we going to create, is this actually the true higher low on the monthly time frame and we're going to shift this high? Or is price just creating a lower high over here to create the next lower low leg over here and create the true monthly higher low? That was the two thought processes in my mind. And then at the same time, you had this weekly pressure supporting that. So when price came over here, right over here, it tapped into this zone. And over here, this became a bit more confusing because now it continued that internal weekly pressure, which was bearish, creating that weekly lower low. However, it could have now been the monthly higher high based on this, if this structure points holds. So what happened over here? So price went back and tested and created that weekly lower high over here, but then it came on and created a higher low, and then it came on and created a higher high. Therefore, now that weekly pressure has shifted from bearish to bullish, and most likely this higher low is the confirmed, pre-confirmed higher low to shift that high over here. Okay, I hope that guys is making sense for you guys. So currently last week we were right over here. and it became pretty interesting. So I'm looking for bullish continuation on this move. So of course, we had marked out all of our liquidity targets, because in order to get the true POI, there has to be liquidity grabbed into that POI. So of course, you've got trend line liquidity for the market all scattered across here. There's a nice bit of trend line liquidity. You had Asia low liquidity over here. If I put the sessions indicator on, you can see Asia low liquidity sitting over here. So we needed to find a point of interest below the zone that, shifted previous structures over here, shifted that previous structure over here to come back into it, create a higher low on this 2-hour, 3-hour time frame, and get bullish continuation push. And therefore, that's exactly what we did. So I refined this 30-minute zone. So this was your 30-minute demand zone. And again, if you look at the zone and the details that go into refining your higher time frame POI, within this zone, around this zone, you have liquidity being generated here, and you've got spiking through it. So this was the main zone to focus in on. I won't go into the refinement of how we refine this in to get in a very precise entry, but you can already see you've got a much more specific area of demand sitting here, but you can refine that even further to get a much tighter execution model here. As price was coming down here at the start of the week, it's creating inducement, so it's compressing. However, you've got a building of multiple equal lows. So this is creating a box of liquidity or indecision or emotional. This is a lot of emotion in this box, because people are seeing that a higher low is being created, but they don't realize they're being manipulated here to buy this early. Now, we did buy this on market close up to here, and I closed about here. So what did price do? As price pushed on from Sunday to Monday, we liquidated that side. London pushed on, and US Open contracted that move and took out that low liquidity that's been built. So that is now the anchor for the true move, because liquidity has now been fulfilled on the way down. And also, as it's mitigating our point of interest, that internal liquidity has been built into our POI, and this is now the framework that we use for the shift. Now, once we go lower time frame, and you can see that refined zone right there. So once we then go lower time frame over here, I'm gradually building a framework for our execution and entry models over here. So then we go on to our entry and execution models. That was based on order flow. I'm not really going to go into that because it's more advanced concepts, but you can see the flow shifts here, and order flow is nothing to do with structure. So order flow is to do with the market intention when price is mitigating order blocks in order to propel price lower. It often pre-indicates a shift in market structure. So obviously there's M15 structure that pushed down into that POI here, or that demand zone. However, if you can look into the lower time frame, you can clearly see the order flow here shift. So you had, I'll go slightly even lower into the 3-minute time frame over here, just to clean this up slightly. So you can see price mitigating the last buy to sell zone, should have mitigated this block crack through. So that's a shift in order flow. I'm not going to go into how we frame the entry protocol here, because that's obviously proprietary information to us, but you can see we shifted nicely. That's where the entry was sent on that 2.2 pip stop loss. We then go and had a change of character because we shifted M15 internal pressure over here, and therefore now the market is definitely bullish, in a bullish market dynamic, and we continue to press higher and higher, and so we can go and print a new higher high on that higher time frame weekly, because this is now the weekly higher low, pushing on to create the next weekly higher high. So where is that most likely going to go? This is going to be my zone of interest, 113.20, but you can see what a beautiful, phenomenal trade that was, and it was only 3 days of holding. So of course, dollar yen is one of those slower moving pairs. It's not going to move that much, and therefore 130 pip move on this is pretty exceptional at high R. So even if you're trading small accounts, big accounts, your account would have grown phenomenally on this trade, because the risk profile on this trade is so low. And therefore, it's just a beautiful trade. There was a subsequent entry opportunity here. As new structure was created, it came into this area of manipulation over here, right? As I spoke about in the previous team call with everyone. So I hope that was useful for you guys, just a bit of framework. But again, your understanding of where the market goes, it starts from the higher time frame. It was very confusing at the beginning because of the unconfirmed structural points that were being built here. However, when price came over here and created a weekly higher high, this landmark should have held. If this was this internal trend was going to continue, we should have continue to make, if I get my other pen out, we should have continued to make lower highs, right? Sorry, apologies, let me shift that. So we should have continued to make lower highs and lower lows, right? Continue to not do this. But however, what happened over here? Over here, we had a shifting of that. We couldn't break that. So the internal trend shifted from bearish to bullish, and now the weekly became bullish. Okay, so the weekly was bearish over here, then became bullish, started making higher highs and higher lows, and now we're continuing to push higher. So now it becomes clear you've got liquidity sitting across here. Actually, this could go much higher. To think about it, it could come back into much higher zone. Obviously, monthly is printing new highs. It can even go and wipe out these structures over here. So that was a breakdown on dollar yen. I hope that was useful for you guys. And again, this trade was sent in real time. Nothing was sent in hindsight. This was done with you guys in real time as it was mitigating this in Asia. So phenomenal trade, phenomenal bit of analysis and trading. So I hope that was useful for you guys. I'll catch up with you very soon. Keep subscribing and liking the videos. I'll keep them coming regularly, and we'll mix it up from market analysis, psychology, and we'll talk about everything in trading, because it's a process that you have to go through. But the first step is obviously learning the technical framework correctly. Now, some of you might also ask, because in that previous call, I broke down and to a T, the NFP came out that way. I said that for NFP, and this is just, we're going to the fundamental side of it, NFP, the previous results, I think, was 235,000. They had projected a total of 500K to come out, the number. So they were manipulating everyone to the upside by saying the dollar was going to get stronger. In fact, the actual result came out to be about I think it was 196,000. So around that 200,000 mark that I said. So that was obviously dollar weakness. And obviously you guys saw the results on pairs like gold, etc., which absolutely flew on NFP. Then so why did dollar yen continue to rise? It's because even though the dollar might be getting weaker, it might not be getting relatively weaker to the yen. So these two currencies are opposed dramatically. They fundamentally correlate. So obviously, everyone's thinking that actually the yen should have become stronger, but it doesn't work like that in pairs like USD, JPY. They have slightly different rules to it. So everything else moved accordingly. Euro USD went up, gold went up. So that's a quick breakdown with you guys. I hope you guys found that useful, and I'll catch up with you guys soon.